Lesson number 3, support and resistance. In lesson 3, you will learn how to find support and resistance levels on the charts on different time frames of where price should reverse. So as you can see, I have a daily chart up on the ESs, aka the Emini S&Ps. So as you can see, we got 0 trend lines, nothing on here, no support, no resistance levels. So it's kind of, think of it as you're a painter, okay? And you have a blank canvas. For us, our blank canvas is there's no lines. We need to figure out and draw a picture of where price could potentially go, okay? Either to the upside or the downside. And then when price gets there, we're going to look for price to reverse and go the other way potentially. And that's going to give us a very high probability trade setup. So let's start off, okay? We'll work our way from left to right, and then we'll probably kind of jump all around afterwards, because that's what happens when you draw trend lines, okay? So as you can see, this is a 1-year chart, okay, of the Emini S&Ps so far. And this is from September of last year until September of this year. As you can see, we have a low here. So what we're going to do is we're going to draw a trend line, okay, at these lows. And, okay, so now we have trend line number 1. Here, we have a little swing high. So we're going to draw a trend line here. Okay, and remember what happens on charts even years before, okay, where prices have made highs or lows, stuff like that. Those are going to always be in effect for years to come, okay? So don't think because a price made a high, it's not going to act as support and resistance anymore. So now you could see we have 2 highs, right? Now, kind of going back from what we learned on lesson number 1 of finding the trend, we could see where the trend is, right? So we have a high here. We have a low here. Okay. And then we have a higher high. Okay, and so on, okay, and higher lows and all that. So we know all these levels are going to act as potential support and resistance levels, right? And as you could see right here, price would actually keep making lows, but we kept making higher lows right here, okay? And so now we have a high here, okay? And then we have another high here, and so on, okay? Now, we don't want to draw too many trend lines, but for this, what we're going to do, I'm going to draw a bunch of trend lines everywhere where I see support or highs and lows. And the reason for it is because I want you to see exactly how price has acted on the first touch or the second or third touch of them, okay? So we have a high here, and then we now have a low here, okay? So now we kind of have a roadmap. We know we could visually see, actually let's do a trend line here and also a trend line here with this guy, okay? So now we kind of have a roadmap of where price is and where price has been and all that, right? So if we zoom in, we could see we made a high here, right? We fell, made a low, and then as we rallied, right, all the way back to this high, look at what price did. We touched and we pulled back, right? Touch, break above, look above, and then fail. Come back, right? These are all trading opportunities, okay? So as price kept going up, and then we would make a low, right? So we make a low here, price rallies, we pull back, okay? Well, a lot of times you're going to pull back to prior resistance levels, right? So as we start making lows here and lower highs, right, and lower lows, we'll look at this high and this so this high right here acted as a support level for this low, right? So you never know which trend line, but also look at where price stopped on this candle, right? Right here, these are dailies, right? And you could just see the market gave everything up in 3 days over almost a year's worth of up move in 3 days, okay? And as you could see, price stopped exactly at this level, which was a swing high here, and then also the swing low here. Okay, so you never know which lines are going to work and which ones aren't. But as you could see, we make a high here, we fail, right? And then we rally back up, and look at this. We may have a trend line and price fails again. Okay, we try a third time, and then we finally break through, and then we pull back, okay, and break up, and now we have a double top, right? So on the way back up, all these lines are going to act as resistance, and then on the way down, they act as support levels, okay? Now, again, there's a lot of lines on this chart, but again, we're looking for support and resistance levels. I'm going to clean all these up, okay? Now, I just want to show you a simple way of drawing trend lines, okay? Now, for support and resistance. Now, what's amazing is how this high, so we had this major break, right? We rally, and we stop right here. Which was this high from almost a year ago, okay? It's just amazing of how this guy stopped here, but on the way down, price blew right through, right? Price didn't even stop here, or on this day, right? Or this day, or this day. Okay, when price just fell through, it fell through. It didn't even respect this. But look at this. For whatever reason, price respected that swing high. That's the toughest thing about trend lines and support and resistance. You never know if it's going to work, okay, this time or the next time or the time after, okay? Now, support and resistance lines can also be drawn this way, okay? As you see, we come down, touch this trend line, keep bouncing, making higher lows, right? Rally, come back down, bounce, bounce. We break through, but then we come right back up, right? So it fakes everybody out. Like, oh, look, we broke that major trend line, but so price isn't going back, and everybody has been prepared or has been conditioned to buy the dip, and then the next time it breaks, right, we just blow right through. There's no support whatsoever. Like normally we should have stopped right here, okay? On this actual trend line, we just blew right through, okay? Or sorry, this support level, we should have actually stopped and bounced at least for a day or two and then fall. But when the market's selling and everybody panics, okay, this is what panic looks like. They blow through every single trend line. But then what happens is on the way back up is when kind of calmer heads prevail, right? It's on the selling, it's kind of like shoot first, then ask questions. Now everybody's kind of gathering everything back, and now we'll start to see support and resistance levels, right? So if we rally all the way back up, chances are we're going to find support, or sorry, resistance, okay, on the back side of this trend line, just like we found it on the front side. And what we'll do is we'll scan down to a lower time frame, and I'll show you exactly what I'm talking about on smaller time frames. But everything I'm teaching you right now, you're going to be able to use on any time frame. So, couple ways, right, to draw trend lines. You could draw them this way, you could draw them this way, right? Slanted down. You could draw them this way. Okay, you could say, hey, look, price fell, right? Fell, bounced, and then potentially we could have bounced from here again and so gone up, right? These are also considered support and resistance levels. Okay, like I said, there are many different ways to draw them. Now, another way is the way I personally would start to draw these trend lines with the type of market we're in is we have a low and a higher low, right? And look at what price did. Remember, until we breach this low, the market is still making on the big time frame higher highs and higher lows, right? Because we have a low, a high, a higher low, we can actually make a higher high until we breach this 1790 level. Okay, then price is actually going to we're still in that technical uptrend, right? If we break and we make a new low, then you're going to want to look to sell every rally, okay, on the big frame. Now, I'm not saying don't sell every rally here because, yeah, hey, look, if price gets back here, yeah, this should probably work. You'll probably see this guy work, right? You're going to probably see this trend line come into play, right? So if we rally, it'll potentially pause right here, okay? So there's a lot of things that are happening, right? Look at this trend line right here, right? This low, if you look at price, we fell, rallied, and stopped right at, kind of breached it by a couple points and then failed. Okay, so on the way back up, all these levels are going to act as major support and resistance levels, right? But one of the things that I'm kind of looking at right now is this on the bigger time frame, okay? This high comes down to this low right here. I get it. I understand we kind of blew right through this, but why did price stop here? Well, because of here. And also now because we have a bigger resistance line, right? So we need to break out. But if you look on the bigger picture, we now might start to make a wedge, right? Like a flag, and just maybe go up, come back down, rally, get smaller and smaller, which is a wedge, and then eventually break lower or break higher. Now, if we break up, I actually have levels I'll be watching, right? I'll be watching these levels, right? Because remember, in the bear market or when things are selling off, okay, people don't panic into stocks. What they do, it's like a coffee shop. Go to a coffee shop, everybody walks in leisurely, one here, one here, one here, right? If there's a fire, everybody runs for the exit at the same time. Stocks are the same way, right? Yeah, you got buyers, but when everybody wants to sell, they all sell at the same time, okay? So now as we start to buy back up and price moves up, all these should really start to come into effect because everybody's very scared to get back in. Okay, because a lot of people sold at the wrong prices, so now they're hesitant to get back into the market, so you're not going to see buying just blast right through all these trend lines. So now we have a few lines that we want to kind of look at, right? We also could potentially take this, right click, and then redraw as a channel and just match it up to this line right here. Okay, well, if we look over here, look at this. It kind of comes, matches up here, right? Matches up to this high before this breakout. So now, potentially, we could be in a bigger channel, right? So I'm just showing you a different way. Drawing support resistance lines and also trend lines are really perception of what you believe you're seeing, because at the end of the day, one person could draw them bearish, the next person could draw them bullish, right? Watch, I'll show you right now. Hey, look, this also potentially could become a bull flag, right? Or sorry, a bear flag. Here's your flagpole. We're rallying, and then we could break down and have another leg lower, right? That's one way of drawing them. Another way of drawing these lines, okay, is draw them this way. Okay, and then you could come over here and we'll duplicate this drawing. And now we're just at the top end of the range, the channel, right? Look at where we stopped today, right up near the high, and maybe we roll back over tomorrow. Okay, so there's a lot of different ways to kind of draw these lines. I could draw it here from here to here and say, hey, we're breaking out too. So there's a lot of different ways. So there's not one correct or wrong way, but the easiest and most simplest way, look for swing highs and swing lows. Now let's go down to a smaller time frame. Let's go to a 5 minute. Okay? Because with the 5 minute, we can actually see price a little differently, right? So look at this. What was support? Price fell, right? Came back down, rallied, came back down, rallied, came down, touch, right? And then we fail. We fall. Look, we're just coming right back to the scene of the crime, right? That's what I like to call it. Right when you start to break down, it's the scene of the crime, right? And then it fails. So now, all we did was come right back up. Now, do you think this swing high right here is going to act as a resistance? I do. These guys right here, right? All this, now I have levels to the upside, right? All these spikes. What I look for is I look for candlestick spikes, right? If you look, we have a spike here and then we fail. A spike and a fail, right? They're all reversal patterns. Okay, look at this spike right here. Well, look at what price did when we got back up to it today, right? We came up and we failed multiple times. So this spike and price rallied right back and we failed. But guess what? We're able to see this on this smaller time frame and look at price, right? Price is stuck right up at these levels, right? So it's banging its head on a resistance. So now maybe it pulls back, it'll come back down, right? What was support now might become resistance, right? Look at this. Right here, right? So we made a high here, we fail. Very first touch, and then fail, right? So these are things that we want to look for as day traders, okay? We want to look for where's the highest probability of us entering a trade for it to potentially reverse, right? So let's say we have a trend line right here in 1976. Well, what we're looking for is maybe we put an order in 1975 and we have a stop loss in 1977, okay, or 78. Give it a little bit of a leash, but what we're hoping is we hope it rallies up, picks us up, and then reverses, okay, and goes back down. But guess what? We know that's a very high probability trade setup, okay? Now, as we kind of drop down to, let's look at the 1 minute chart. Okay, the 1 minute chart. Now we see these spikes even cleaner, right? Look at this. We had a triple top right here. 1, 2, 3. Acted as resistance. Failed. Came back up. Failed. And then we blew right through, right? So now when we come back down, all these might act as support on the way back down because we blew through all this, right? We kind of blew through very easily on it. Now let's erase all these and let's look at the 512 tick chart. Okay, the reason I like the 512 tick chart a lot is because you could see patterns. Okay, we could draw trend lines like this. Okay, and as you could see, we're making higher highs, right, and higher lows. You could even call this a ascending triangle. We have a double bottom right here. Okay, that we had this morning. So as price pulled back, we had a low, pulled back again, a low, right? And then we had a high. Well, look at what happens, right? As price kind of goes back up, we see this high, this low. These highs fail, right? you could say this is a head and shoulders, right? Shoulder, head, shoulder. But if you look at what price did. Okay, so price came back down, bounced, right? But if you look, we came right back down to the shoulders and we did another double bottom. Okay, or another way of looking at it is it kept coming down to a resistance level and it kept bouncing at these levels, right? So I'm going to just kind of go over real quick with you because it's actually a perfect trade pattern. So again, you have a shoulder, a head, and a shoulder. This is what a head and shoulders is, right? And then you have your neckline. That's one way of looking at it. You could say then it turned in and morphed into even bigger head and shoulders, right? First you had one, but then it kind of got bigger and bigger. Okay, that's one. You actually had the same exact trade right here, right? But this one is, here's your shoulder, right? Sorry, here's a shoulder, and then this whole guy was your neckline, right? So if price actually broke down, these are bearish patterns, right? But when you look at it on the bigger picture, what these really are, and let's do this. Let me grab, okay? So now what you actually have is down, up, down, up, okay? It's a W pattern, okay? You actually have another one right here. Down, up, okay? These are what I call W patterns, okay? W standing for winner, okay? So on the winners, you want to be long on these patterns, okay? And what happens is, as these patterns, once price usually breaks above, this part will actually become support, right? Price will fall, we rally, fall, rally. As we come back to test it, it'll act as a support level, okay? And that's what you saw, and then we bounced, okay? And then you saw another pattern, and then we bounced. But a lot of times these are very clean, good trades for the long side, okay? They're called W patterns. Then you actually have what's called a M pattern, okay? Where if you flip it over, you could almost call this the M pattern right here, right? You have a M pattern, right? So as an M goes like this, right? It goes up, down, and then on the second, once it breaks below the middle of the M, it falls apart. Okay, so these are just a couple ways to look at it, different patterns that I saw. But again, watch support, watch resistance. Right here, triple top, that's a support level. Or sorry, a resistance level, right? Once we break above, this now should become a support level. So that's it for lesson 2 on support and resistance. Next up will be lesson number 3.